Well, it's finally here. Thank God. I'm sick and tired of this campaigning. I want to get back to where the markets respond to just economic news instead of political news. Okay, let me give you a quick overview. I don't know who's going to win. It's very, very tight. The polls say that Biden's ahead, but the polls are wrong. The polls are always wrong because they oversample Democrats. So they'll say that they'll sample 37% Democrat, 32% Republican. That's a typical split that a poll will have because guess what? Democrats are 37% of voters are Democrat, 32% are Republican. But Republicans vote more than Democrats. So it should be about 50-50. If you subtract 5% from Biden's across the board, you're going to be much more accurate at predicting this election than if you look at the polls as they are. So what does that do? It gets us down to 50-50. So I don't know who's going to win. All right. So let's talk about what is the market. How is the market going to react? Well, I think it's pretty obvious that a Trump victory would be far more positive for the stock market. We saw that in 2016 when the Trump victory, which was a surprise, turned a bear market into a bull market. The market had been in a bear market because it thought that Hillary was going to win, and Hillary's policies are more anti-stock market than Trump's were. The same situation is around today, except that Biden's policies are even worse for the stock market than Hillary's were. So if Biden wins, I think we'll see the stock market drop. If Trump wins, I think we'll see the stock market rally. Now, what are the policies that the market's looking at? Well, on Biden, they like the fact that he will stop the trade war with China. They like that. They like the fact that he'll increase stimulus spending over the short run. They like that too, because that supports spending over the short run. The big problem with Biden is taxes. He wants to raise income taxes, he says, with people over $400,000. But the reality is not over $400,000. Because of inflation causing changes in tax brackets, because of Social Security taxes, because of Obamacare taxes. It's really across the board. All Americans will have increased taxes. It'll be felt more at the high end, but he says over 400,000, but then he goes in and says, yeah, but we're going to put back in the deductions, which help rich people. They don't help poor people. Trump just says he's going to lower taxes across the board, all forms. The big issue is capital gains taxes. That's the one. Income tax, also a factor in the stock market. But capital gains tax are a tax on profits that you make from capital transactions. Now, that includes your house, but it mainly is the stock market. So the stock market, if you raise tax on capital gains, you reduce the value of capital. You therefore reduce the value of the stock market. Trump says he's going to cut capital gains taxes. If he cuts capital gains taxes, that increases the value of capital, which increases the stock market. I had a question on my YouTube channel, and somebody said, but doesn't that just affect people over $400,000 income? No, it affects mutual funds. It affects pension funds. It affects 401ks. It affects almost everything that people own. People's retirements are in stocks, so it's going to affect those stocks. Okay, let's get on to the market. So that's it. I don't know who's going to win. I'll be frank with you. I thought Hillary was going to win, so I didn't call that one very well at all. I think that now that we have this experience, I think Trump has a better chance than he had with Hillary, actually. I think he has a better chance of beating Biden than he did of beating Hillary. So let's carry on, though. But I do know this. If Biden wins, I think the stock market will go down. I think if Trump wins, the stock market will go up. Hey, everybody, Courtney Smith here with the November 2nd Wall Street winners. The year is getting shorter and shorter. All right, and this is not getting any shorter. Okay, S&P. We've been talking now for several weeks about the potential for a failure top. The problem with doing any analysis right now is I don't know who's going to win the presidential election. So if you tell me that Biden's going to win, I think we're going to break those lows at just above 3,200. If you tell me Trump's going to win, then I think we're going to rally back up towards the old highs. So I think we have to sit here and wait. I hate to do that. I hate to weasel out, but frankly, that's the only way I see it. Recent price action is bearish, but the purple predictor says that the smart money is betting on Trump. Over here, selling pressure very high, the highest it's been since the COVID crash. That's incredible. At the same time, we're seeing buying pressure, the little green line, it's at the lowest level it's been since the COVID crash, and the black line is going up, saying that the bear market is encased. Now look at the price action in the Dow. It broke those lows in September. It's now officially in a bear market. We're making lower highs and lower lows. We had a gap a few days ago. That's bad price action. NASDAQ, though, I shouldn't say a long way, but it's above its September lows. S&P, below the September lows. But look at the purple predictor. The market's going down, but the purple predictor's going sideways, showing that small investors, you and me, we're selling, but the smart money is buying from us. Well, let me ask you a simple question. Who do you think's going to win this battle? The smart money or the dumb money? Yeah, you got it. All right, seasonality on a bull signal. Utilities on a bull signal. So that's helpful to the market. The seasonal in the election pattern, we should be looking at the green line, maybe the blue line, but the green line is is the situation we have now, and it shows a bull market. Asset allocation. Well, I've been talking about how money has been going into the stock market from the bond market, but they decided, you know what, we think we're going to go, because it's a week into the election, let's go buy us some bonds, because we know they'll mature at 100. So we know what's going to happen with the bonds, so they went to safety. Stock market risk indicator also went to safety a little bit, not a lot, just a little bit. Okay, global shares breaking to new lows. Notice we're at the lowest level we've been since June. Foreign shares are being hit much harder from COVID. We're seeing a renewed lockdown in places like all of Europe, but particularly places like Germany, Belgium, Luxembourg are being shut down. The UK is shutting down more. France is shutting down more. So big population centers and economic centers of Europe are being shut down, and that's hurting global shares. The yield curve is climbing. This is bullish for the stock market. Not super bullish yet, but a little bit. It's always better to be going up than down at this point. So that's helpful to the stock market, but as I say, not that much. Bonds under pressure. Fully paid up members know we're short bonds. We've been short bonds for a while. I think interest rates are going to go higher on the long end. Notice the purple predictor is bearish, so it shows the smart money here is selling bonds. They're buying stocks, they're selling bonds, but the overall market is doing the opposite. You got to be thinking the smart money knows something we don't know. Bond key factors all saying we should see higher interest rates. Dollar starting to rally, okay? As COVID is hitting Europe far worse than it is in the United States, we're seeing the economic growth in Europe start to falter a lot. At the same time, the U.S. is staying fairly strong. Not great, but staying pretty strong. So we're seeing money flow out of Europe and into the United States, bulling up the dollar. Gold under pressure, and I think it's going to continue under pressure. I'm no longer thinking about buying gold at all. Here's our indicators. 2 out of 3 are going down. And fully paid up members will see that we have even more reasons to get bearish on gold. Now, can I get short here? Not really. That's not much of a bear market. So I like to go where the action is, and gold is not where the action is. By the way, once again, would you please ignore the Johnny One notes that say that gold's going up and silver's going to go up even more? They're ignorant, and they've been wrong for 10 years. Okay, crude oil, a lot under pressure. Now, this is also interesting to me because crude oil is very sensitive to the economic situation. And I think that the economic situation is getting worse, obviously, as I've been saying over and over again, particularly in Europe. And so the demand for oil is going down. The supply is steady. I don't think there's an increase in supply here. The Saudis said they were going to increase the supply and then said, no, you know what, we're not going to on November 1st. So I think this is a lack of demand, particularly from Europe. Bitcoin, bullish as I told you to be a few weeks ago, and remains on a sluggish bull market after the breakout. But I think that staying on the long side is the place to be in Bitcoin. All right, everybody, thank you very much, freebies. Love having you here. Fully paid up members, just hang on for just a second. Hey, freebies for Wall Street winners. Really appreciate having you here and love to have you participate in the Wall Street winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.